The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 44. You get the NASDAQ up 12. S&P's up 3. Gold contracts trading down $5 at $12.48 an ounce. We have silver down 3 cents, $18.22 an ounce. Platinum is flat, $9.54 an ounce. We get light sweet crude up 33 cents, $49.84 a barrel. Notes, the 10-year note down 2 ticks, 124.16. 30-year bond off 10 ticks, 150.29. King dollar up 89 ticks, 99.925. The euro is trading at 107 to the U.S. dollar. The yen is at 111 to the U.S. dollar. Bottom line is that another day, another market up. We got window dressing happening. We get the end of the quarter, folks. You get the NDX 100 that had tested the high last night, which is 54.41. Got up to 54.48 at about 8:30 last night. Gave it up. It's testing that whole area once again. So that NDX 100, that's the baby to watch. We had Amazon go to new highs yesterday.
Yeah.
Bezos, second richest man in the world after
Bill Gates.
After Bill Gates.
Sure.
Bill Gates is, as of yesterday, Bill Gates was $10.2 billion ahead of him.
Okay. Microsoft is still rocking too, so it's amusing in terms of that battle. Yeah.
It is. It's pretty amazing.
Yeah.
Let's go over to our man, Mr. Kevin Hincks from TD Ameritrade Thinkorswim. Don't forget, folks, every trading day right here at TFNN, Kevin Hincks, Scott Connor, swim lessons, 12 to 1 Eastern Standard Time. It's an outstanding show. You want to understand options upside down, no matter where you're listening right now. If you're listening on the West Coast, you're getting up. I know it's 6 o'clock in the morning. Yeah, it's 7 o'clock in the morning. You're coming down the coast. Bottom line, remember, at 12 noon or 9 o'clock your time, just hit TFNN.com on your cell phone. Hit Tiger TV. You're going to get some great education. Kevin Hincks, what's going on?
Good morning, Tom. Good morning, Tommy. How's everybody doing?
Doing well, Kevin?
Going great, man.
Yeah. I'm looking at some numbers here. I think, the big number today we're going to talk about a lot is GDP.
Okay.
And they gave it a little bounce here to 2.1%. I think that's something that the market can at least hold on to right now.
Yeah, that's going to be interesting because they were looking for anything over 2%. Well, that was inflation. They're looking for 2% over. But a GDP, they want to get it up to like 3%, right? That
Right.
would be like the acceleration. And if that happens, folks, watch out for those interest rates.
Yeah, definitely. Right.
Right.
Yeah.
Right. And you can't. It's tough to hang this on anybody at 70 days into a presidency. But
Sure.
Everything that's forward looking, Tom, is really positive. Right now, GDP, that's looking at right now what's already passed. Now, this is the third estimate of fourth quarter GDP.
Okay.
So that's what that is. GDP comes out in 3 numbers, basically.
I see.
This is the third estimate for fourth quarter. So, I think looking forward, people are optimistic.
Oh,
right?
there's no, that optimistic number, when it came out yesterday or the day before, it was the most optimistic since 2000. So
Right.
Consumer confidence, is that what you're talking about? Okay,
right.
cool.
Just,
Sure.
they feel good.
Right.
That's the bottom line. What did come out this morning, though, which I thought was pretty wild, is that the Bloomberg has one, and it went down from last week, and it was an all-time high last week, and it went down slightly. And what they said is that it went down just because we had a little pullback in the marketplace. So you can imagine, do you know what I mean?
Sure.
How quick that can change. It's almost like, Kevin, when we're looking at that WIRP symbol on the Bloomberg, which is the, Fed rates probability.
Fed futures,
Sure.
yeah.
Yeah, when I look at that, it's like, because it changed so quick, in February, it's almost like I look at it, but you realize, we went from 34% to like...
To 100.
Yeah, to 100, like, what, 2.5 weeks? It's
Yeah,
like,
Yeah, it was
probably,
crazy.
right, yeah.
And the number you guys were talking about, that consumer confidence that came out Tuesday, 125.6, the highest number since September of 2000.
Wow.
Yeah. The consensus number they were looking for, 113.8, came in 125.6.
Right.
So that's what we're talking about. Everything forward-looking, consumer confidence, all the manufacturing sector, the PMI numbers, they're all flying.
And that's important because then people spend money.
Definitely.
That's
Absolutely.
And when people spend money, especially in the orange communities, folks, okay, the bottom line, cash gets circulated, and that's a big deal. And if cash gets circulated, people can make money,
I agree completely. So, I think this is a good number. The fact that it broke that 2% number and got to 2 point something, I think is good. It's showing positive, everyone's looking for something higher than 2% going forward, right? Yeah. We've been in the ones and the 1.5s for so long. We'll see how we digest this. But, it's amazing to me that, I'm really trying to work my head around what the three of us talked about yesterday, which is, foreign buying of our bonds and how they're keeping our rates lower maybe than they even should be, frankly, because they're looking at rates, in the Eurozone versus rates here, and they're buying our bonds.
You can see it, yeah.
Eventually, something's got to give, right?
Yeah, either their rates have to go up.
Right.
I'm looking at this morning, so look at this. Germany is 0.3% on the 10-year, and we're 2.3.
Yeah,
that's intense.
Right. So
Italy's broken. They're 2.1. Spain is broken. They're 1.6. That's amazing.
Yeah.
Yeah. We're going to have a lot to talk about, though. Obviously, today we're going to talk about combining vertical spreads and calendar spreads. So we're going to get a little deeper dig.
I like the multi-layer
into
ones.
some options today.
Totally. Right here, folks, 12 o'clock noon, TFNN.com, hit Tiger TV. Kevin, have a great one, a safe one. We look forward to the show today.
Always a pleasure, guys. Have a great day.
You too. Stay right there, folks. Tommy and I are coming right back. Dow's up 58. Nasdaq's up 14.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we have the Dow Industrials right now up 68. You got the Nasdaq up 14. S&Ps are up 550. Those NQs are at 54.44. And the number to keep your eye on here, folks, is that you get two different numbers. You get the high from last night, which is the 54.48. The more important one is the 54.41. That was the high that is the high that it's over right now. Let's go to Stanley in Treasure Island. Hey, Stanley, what's going on?
Hey, Tom, just wanted to thank you again for that great presentation you had at the Westin.
Well,
I got a question about Lulu.
We appreciate you coming out and growling and prowling with us, Stanley.
What's that?
I said we appreciate you coming out growling and prowling with us.
Oh, yeah.
He's getting caught up on your lingo, man.
So, Lululemon. What do you want to do with Lululemon?
I just wanted your take on it. It would be short-term take, and I think the volume is interesting, and I've been trying to read your book and understand that quality volume, and we've had some pretty interesting volume moves since yesterday during the day till this morning,
Okay, so let's take a look at it. If we pull Lululemon up, I just put it on a 2-year weekly. In fact, I put it on a 3-year weekly and open it up a little. So, you take this, you put it on a weekly chart. What you're going to see is that Lululemon topped out August of 2016, $81, has tremendously light volume at the high, 8 million shares. It comes off that with 31 million. So we go downtown from 81 to 54. Now, what you're going to see is that what stopped it at 54 is a downdraft that had been created in September of 2005.
15.
Thank you. 2015, $52.88. Okay, so that was a big sellout down there. So that when you see these, what happens there is this: is that there's so many people that got out right there. That my take on it is that the bottom of that, well, the top of that would be support first, and it didn't hold. The bottom would be support. That's a flush out of everyone. Like everyone that's going to get out gets out. So it comes down, it holds at that level. It comes into that level with 13 million versus 52. You go back topside again, and you're going topside. We did 34 million.
And just, can you go over the dates? You're going so fast
Yeah.
when you say it came down with 13 million. I didn't even see where you were talking about there.
Okay, so
what date? Yeah.
we made a low.
So that's October of 2016.
Yeah, we made a low.
Okay, that's why I just didn't know what date you were, because it looks like the current date we came down there too, and now we're on 34 million. That's where I want to be clear.
Right.
So you're looking at October 2016 first. We come down on that level. Okay,
Yes.
go ahead.
We do a bounce, a good bounce.
December of 16.
Yeah, we go 55 to 72. Can't get to the swing point. And then here, I need to put it on the daily for you. So we were at the weekly. I'm going to go in the daily so you can get clearer as to where you are, inside. And what you're going to see is that when that big spike came up in December, that was the test of the downdraft of September. And bottom line is that, you came back down to try to close the gap at the low, couldn't close the gap at the low, and now you're blown away. I mean, I wouldn't touch this thing. This thing is in a vicious downdraft. If we put this on a monthly, what you're going to see is that, there it is right there. You still have a high volume low on the monthly. The high of that is $46. The low is 36, and that is from June of
2014.
And more than likely, if it breaks this 49, which I believe that's the one that held it last time, right?
That's September 15.
Yeah, if it breaks that, bottom line, you're going to be down at those lower levels, man.
You might be trying to short it. I don't know what it is. What were you trying to do with it, Stanley?
Oh, I did an earnings play on it, so I put a condor on it, and the expected move was like $5. It moved like $10.
Yeah, now it's.
So I got a little bit steamrolled with the
Okay.
puts I sold on the low side, and I'm just right now I'm okay with it because I had the call side, and
Sure.
it just for me. I was looking at it, and when I looked at it on the 10-minute chart.
Okay.
Like for a day trade now, I looked at it on a day trade, but it may be worthwhile to just go out and buy put, a couple of months out. Who knows if it looks that bad, if it looks that weak.
I would let it bounce first. I mean, you're down $15 in one take. You know what I'm saying? Doesn't mean it has to bounce, but when you're down like that,
It's down 20% really is a better way to sum it up in one day. Yeah.
Right.
No, I thought it would be interesting when you looked at the volume on the short term because, like, just before close, the volume was, let's say, it was about 0.7 million, and then at the close, after the close, after hours, it went like to 1 million almost, and then the volume was pretty high, like after hours, and now again. This morning it's kind of trading very high, like at 5.8 million. So I thought it was interesting to look at, the volume and how it began to drop off and the price is flattening out because it's way above short term. It's way above average. I wondered if.
Okay, so when you're putting a trade on, what you absolutely want to do, I mean, if you're trading the S&Ps intraday, or even you're trading this intraday, that's fine. But you want to look at the larger time. That's why I went with a larger time frame down to let's say I went to the weekly, couple years, bringing it to the daily to see, okay, what is it doing? And, this has been going down for quite a while. Then you turn around and look at the intraday if you're going to trade it intraday. And if you're going to trade it intraday, that means that you are not taking it overnight because you're going from an intraday aspect, right, to an overnight aspect, which is totally. It's not that it's different, but an overnight aspect. Then you got to figure out, okay, am I going to look at the weekly? Am I going to look at the monthly? And you don't know. That's the bottom line. So.
No, I thought it was interesting because it blew away the people with the expected move. They expected an expected move or market maker move of $5 and it moved 10. And I was wondering, why didn't they see that with all the options contracts? Like, why couldn't they see that and?
Well, what he's talking about, folks, is this: is that on a Thinkorswim, great platform. There's other platforms that have it. You get an expected move. Those expected moves, many times they come in fine. Other times they don't. They get blown out.
Yeah, and it's just what the market's pricing that volatility at.
Right.
And realistically, what happens, Stanley, is that's just a best guess. I mean, nobody's going to know what the earnings are. So the market's just making a best guess on really a number that nobody should know at all. In terms of that's. Inside information to the utmost. So it looks like they disappointed pretty harshly, And so when a company comes in, it's,
Again, it was interesting because it only missed by 2 cents. So I thought this was just an interesting.
What they didn't do, though, Stanley, that is not with the numbers that they came in with now. It's their forecast in the future. Their first quarter forecast is off by over 10%. It's huge. It's a huge miss. It's not. Okay. They made money this quarter. They made what they're supposed to make. It's the first quarter that they're saying, hey, we're down 10% on gross revenue. Never mind their bottom line.
Future expectations.
Yeah, right. Cooking, brother.
Okay, thank you.
Thank you, Stanley.
Have a safe one. Dow Industrials right now, folks, up 60, NASDAQ up 7, S&P's up 4. When we come back, folks, we're going to have those gas numbers for you.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI, oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 67. You get the NASDAQ up 8. S&Ps are up 4.5. And we'll take a look at these gas numbers out here. So the natural gas contract, it looks like, look at the...
Boy, and we say, you know, if you're trading those things, maybe those things, you know, they're just if we had looked at the spreads on Nadex, when we talk about maybe having your orders in on both sides, that's quite a spike down to now we're almost back positive. You're talking about from 319.5 down almost all the way down to 316 and back. So if you're ever playing both sides of that trade, and man, you get out of it on this side, even if you're just covering your cost, right?
Big
Boom,
time.
you're back up to maybe where you have some value.
And let's see what they have to say. So, natural gas, where are we? Okay, so...
Yeah, so it looks like stockpiles fell 43 billion cubic feet. I mean, just real quickly, the Bloomberg estimate, which is a good guide, isn't the median, but 45. So in the ballpark, nothing too dramatic.
Right.
And look at even there, median estimate was actually 43. So you're talking about it got pegged, and I don't know what the initial reaction was, but it makes sense that we're back there. And that's where really, if you see the news come out, you say, man, you know, maybe I shouldn't be looking for volatility if they peg it to the penny.
Exactly.
And you say, I'm going to jump out of this instantly.
That is pretty wild.
To at least get my money back.
Exactly.
You know, and then if you get some volatility to the upside, back to where it started from, which maybe you might anticipate because you got a number that was exactly on the median estimate. But we'll see what happens.
That is pretty amazing. You know what's pretty amazing is that...
It's good we didn't do a volatility trade.
Yeah, big time. That's no doubt, man. You know, that's... Yeah, there's no doubt about that. And, of course, what ends up happening now, which is going to be really intriguing, is to watch how this plays out in the next few weeks, meaning because we're in April now, too, right? And that, we had a cold spell a couple weeks ago, so that's where that downdraft probably still comes from. Now, the question's going to be like, okay, you know, as Andy says, injection season starts I don't know if he said April, but it's in the next few weeks that they expect more going in than coming back out. I was asking about that. So, meaning that seasonally,
sure,
normally that's the injection season, and he was talking about that. The injection season though goes all the way up until like next September or October. That's a long time.
Sure,
you
sure.
know?
It's a lot of natural gas getting produced out there.
It is a lot of natural gas.
You know, I've been even just with all the coal regulations with Trump getting passed,
Right.
one thing that I've actually heard that I wasn't aware of is how much natural gas is just really putting the hurting on coal versus anything else in terms of, you know, electricity companies getting 6-7 to 1 natural gas to coal versus what they're using, and that's not going to change anytime soon. And the statistics really were not startling, but just in terms of how much natural gas and how integrated it already is in everything.
That's right.
Yeah.
If they have the pipeline coming in, natural gas is cheap, everyone's going to use it.
Yeah. Electric companies are just plowing all they can to get, you know, a majority of what the electricity they're producing coming from natural gas.
And that, no doubt, is probably some of the biggest uses of energy, period.
Yeah,
right?
For sure. Yeah.
So look at this. We just
pretty remarkable.
Yeah. So you had a 4-penny bounce.
Yeah.
From highs to lows.
Right.
Yeah.
Both ways too.
Both ways.
Yeah.
You know. Our phone number is 877-927-6648. We go over and we take a look at that broad market here, see what's the strength and weakness inside these indices. Right now, inside the Dow Industrials, let's see what we have. Oh, look at Goldman still bouncing. Okay, so the strength is still...
They're a $200, I say it every time, but
Yeah.
they're a $200 stock, man. It's amazing just the way the Dow is calculated, price weighted.
Isn't
how
it?
It's, you know, it just seems completely unfair in terms of you know, it should be capital weighted, right? You know, in terms of, you know, how is the value of those companies changed today?
Right.
The price of a stock is kind of an arbitrary number. It really is.
Yes.
I mean, they could split 10 for 1. They could split 100 for 1, and they could be trading at $2.31.
Right.
And it's the same company.
Right. Well, there's I forget the name of this chart. I used to bring this up a lot. There's a chart. I wish I remember the name of it. Okay, there's a chart that you find in a lot of broker dealers' offices, and what it is, it's a chart of the Dow Industrials on a longer term basis, right? And it shows that it's always gone up, right? What they don't show is that the only stock left that hasn't gone bankrupt is General Electric.
Okay.
In the Dow.
Sure.
And it's to your point.
Sure.
That what ends up happening, that like when
They're different points, but go ahead.
Well,
I know,
when they put Microsoft in,
they rebalance and take out.
Exactly, they take out the weak ones.
In fairness, though, that's, you know, they wouldn't be the 30 companies controlling the industrial nation in 2017 if they're all out of business. You know, it's supposed to represent the 30 companies today.
That's right.
So
No,
that's a different point from price weighted versus capital weighted. Just completely different.
I guess my point is that the Dow hasn't always gone up.
Sure, no,
all those companies.
Definitely. But what's your perception of the Dow 30? That's, you know what I mean? The Dow Jones Industrial Average. You know what I mean?
Oh yeah,
That's all I'm saying
there's no doubt. And when we look at it now, it's like, okay, you know, the bank is, you know,
but Goldman's always going to be up there just because it doesn't take much percentage-wise on that stock to move the Dow a lot. Where you look, you know, for instance, right?
For instance, we just went up 20 points in the last 3 minutes.
And you know, you have a $3 move on a $230 stock.
Yeah.
Versus you have a 66-cent move on an $80 stock. There, you know, and meanwhile, Goldman Sachs is adding 4 times the value for that move. Where percentage-wise, it's nowhere near 4 times the move. So it's interesting. Yeah.
Let's go as we're just talking there and see what the rest of the market's doing, because what you just had is that. The NQs, let's go over to the NQs first. Well, let's go inside the NDX and see what the strength versus the weakness is. So the strength inside the NDX 100 right now is Seagate, that's up 1.6%. NVIDIA's up 1.6%. American Airlines up 1.3%. Taken away from it is Liberty Finance, one of the Liberty companies, down 1.6%. TripAdvisor down 1.6%. Regeneron off 1.3%.
How about Microsoft? Can you take a look at Microsoft?
Yeah,
because one thing,
powerhouse,
their CEO, Nadella, what's his name?
Nadella.
So I was reading just some CEO. Can you bring it back more like 15 years?
Yes.
So what's interesting is, you know, and anybody who follows the market just knows in terms of earnings, you know, fundamentals, that company is clicking on many different, you know, Dave White talks about it.
Right.
So what's interesting is that Steve Ballmer, for his whole tenure and whatever it was, 15,
Right.
14 years.
Right.
I think the stock was down 11%, or maybe it was 11%. I think it was down 11%. The whole time he was there, it was
Right.
down 11%. And since Nadella has come in there in 3 years, I think it's up 99% in that time. This is amazing how,
Isn't
a shift in and they really have dramatically. That's not a coincidence. That's not like the chart just catching up. You
Right.
know, that's them dramatically changing the cloud,
Yeah.
all they're doing. But
No
it's,
doubt.
it's remarkable when
It is.
So if 3 years ago, Bezos would have no problem eclipsing that $10 billion makeup that he's got to make on Bill
Right.
Gates, but Microsoft's a powerhouse too.
Not now.
Right,
Exactly. And if we go look at it today,
can you bring it back 15 years? See if it was, see
totally.
what kind of pocket change it was trading at.
We got Amazon up. I'll bring it back 20 years now.
Yeah,
Isn't that sick?
it is. And go back even. I just want to see the closest time when it really took off. I mean, that's amazing. You're talking about 2009, not that long ago.
No, it's not. 2000 at the crash, you could have got this at $38 to $48.
Yeah, and
Yeah.
even not even being that ridiculous, right? Even if you as in if
I
you let
know.
it get a lot of room, you wait almost 6 months, right? And look at that, it gets some trend. You're
Yeah.
still getting in at 80. You're getting a 10-1, and that's letting it go up
Right.
like 100% first before you get in.
Right.
So you're not buying,
Yeah.
some collapsing company. Pretty cool.
Amazing.
Yep.
You stay right there, folks. Tommy and I are coming right back. Dow Industrials right now up 83. Nasdaq's up 13. S&P's are up 7. We're going to be right back.
It really.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now is up 81. Nasdaq's up 15. S&Ps are up 7.5. Let's go over. I want to see this story again. I was reading the story this morning, Tom, that I thought was pretty amazing, and it was about ESPN. And so the headline says ESPN has seen the future of TV, and they're not really into it. So what this story is about, the main Sports Center studio at ESPN headquarters in Bristol, Connecticut, is a blue lit box. The ceiling is as high as a cathedral, as cathedrals, and there are enough floor space to land a helicopter.
Sure.
Screens are everywhere.
And everyone's watched or seen SportsCenter probably if they've ever watched television in terms of just coming across. And I mean, they are technology mavens in terms of how many screens they have right now, for sure. And so what is this saying beyond?
And so they broke ground. They spent $175 million on that facility. It's 194,000 square feet.
So 2011 they did that. That's Bristol, Connecticut. That's where they're based out of.
Yep.
Future-proof, capable of adapting everywhere.
Yep.
Its namesake, ESPN, just topped 100 million subscribers, I guess, right?
In 2011, exactly. And they go on to say that 5 years later, there it is now.
Profits are shrinking, and the 10,000 square foot studio has already begun to look like a relic. Oh man,
isn't this
the
crazy?
show's formula in which a well-fed men in suits present highlights from the day's games is less of a draw now that the same highlights are readily available on social media. Viewership for the 6 p.m. Fell almost 12% from 2015 to last year. 12% a year.
I know.
When you're just talking about something like 6 p.m. Sportscast is a remarkable number,
isn't it? Now watch it as you go down, folks. The amount of money that they get per subscriber.
Yeah, and it makes sense because, you know, if you sign up for cable, like a lot of people know, there's really only a few channels that you really want.
Yes.
You know, that drive you. And so cable companies know that ESPN's one of them. So guess what? ESPN knows that too.
Right.
And that's all changing. This is really what happened in the past, right? But yeah, so they demanded a high...
$7 out of a package of 100. They get $7.25. If you move down a little, just move down a little, you'll see that. There it is right there.
ESPN still towers over its rivals in cable programming. I mean, yeah, imagine what, you know, pick any random cable channel that we all gloss over. They get what, you know, 5 pennies, 10 pennies. Who knows if they're lucky? But short of criminal enterprise, few business models in the world have been as lucrative. The typical cable bundle costs about $100 per household. We all pretty much know that. And 100 seems almost light.
It is light.
In simplified form, when a customer sends in a monthly payment, the cable company sends out a cut to each channel included in this bundle. Some channels get paid more than others. That's an understatement. ESPN gets the most. Carriers pay $7.21 per month on average to every customer that gets ESPN as part of the bundle. And I don't know if it even says it in here, but I bet so many bundles include ESPN. I don't even know if they have bundles that you don't include ESPN. You know what I'm saying? Where it's like, and I bet there's some, probably small cable providers, but and here we go. With almost 90 million homes still getting ESPN, that's $7.8 billion per year. ESPN2 chips in with an additional billion, which is remarkable. And that's one, though, that does differ, because I know that some plans don't include ESPN2 immediately, and that's because at one point I didn't have ESPN2, which I almost felt like I was getting gypped because it seems like such a standard channel.
Right.
And revenue from the print magazine and website, which is the most trafficked in sports, brought in $16.6 billion in revenue and $6.7 billion in profit. 43% of Disney's total, and more than its theme parks and movies studios combined.
Isn't that amazing?
Yeah, I mean, it makes sense just in terms of ESPN, such a juggernaut, man. I mean, the amount of sports that they cover, there's nothing like them, and in, you know, live content, live sports is a huge deal. So still. And what does it say as to why they don't like it so much? This is a long article.
What happened is that I stopped reading it too, because what I got out of that...
I would have kept reading it, but we're live on the show.
What I got out of it was that, oh my God, social media, they said they put all that money into that studio, and social media is doing the same thing for immediately now. It's like unbelievable.
Yeah, I mean, the SportsCenter program in particular is tough because all they're doing is rehashing what's happened, and the internet in general has just caught everybody up. You used to have to watch the 11 o'clock SportsCenter or the 6 o'clock to see some game highlights, and nowadays they're everywhere, on Facebook, on wherever it is.
Especially good highlights.
Yeah, right. The ones you want to see.
That's immediate.
I mean, you want to go see the top 10 on SportsCenter, right? Well, any awesome play is just going to be showing up on SportsCenter. Even if you just follow the ESPN Facebook page, they're putting it out probably or something, right? So how does that translate? Let alone if you follow your own team, you know, the Rays, the Bruins, Celtics, whatever, right? Yeah, it'll be interesting to see how this all plays out.
I know, because you go down 12% a year, man. That's
yeah. And again, that was just their sports center, because it's on the other side of that is everything else can be DVR'd. They control so much live sports that's never going to be DVR'd for the same reason. Nobody wants to watch yesterday's program, yesterday's game today, because guess what? You already know what happened. There's no denying it.
Right.
So they kind of have like a great asset, but guess what? They're going to have to keep paying for that asset. And
that's what it has in there too.
That's right. Yeah, they're going to face competition with that.
No, that they already paid. What had happened is that these deals, forward-looking, they already had paid so much money for all these rights that it's billions and billions of dollars. That, right now, as they said, that's it's almost a criminal enterprise. They had made so much money on it. That was their words.
Yeah, no, I mean, it's nice to get $7 from every single cable household in the country, because just like, there's a lot of those households that don't watch ESPN, just like there's so many that are, and they're still getting it in the same way. You can go ahead. The only thing that I was going to mention was that it'll be interesting because nobody else is really equipped right now to pay that kind of money for the rights to live games.
Yes.
And compete with them, but that's just changing because Netflix and Amazon are totally equipped to pay for that, and that'll be interesting to see when that shift happens. How does the NFL decide? Because the NFL is trying to make this decisions too, because they're getting paid from ESPN, but they're probably seeing the same thing and saying this model is going to change. So when is the time when they say now you can watch every single NFL game on Netflix? And guess what? Guess what happens? Everybody cancels like cable. Yeah, I mean, you know what I mean? The NFL alone. The NFL alone, and some people love the NBA, whatever it is, right? There's no reason why all of those leagues can't be on Netflix or Prime, because nowadays 90 million households have ESPN. How many households have Netflix in the U.S. alone? Probably above that number, I think. Yeah. At least ballpark. Right. So it's not like the NFL would be taking away. They'd really, you're still available in the same amount of households, and that's what it probably had to take for the NFL to finally say, okay, now we can get away from TV, because they need to reach 90 million people.
That's intense, man.
It is intense.
Because you're talking about all those companies. When is the tipping point? How much are we going to get?
Sure.
Because you can imagine, you're getting billions 1 second, and if someone comes in, and they got to be looking, just like you said with Bezos and with Netflix, like, are they going to destroy this model on us?
I assume at some point they are. Yeah. It's just not if, but when.
Yeah, right.
Because it really is. There's no reason why only TV companies can bid for the best content available in live programming. So think about that. I mean, I
listen, what happened, so picture this, folks, okay? This is pretty wild. I've been thinking about getting rid of cable anyway, because most of the time I'm always on Netflix, or we get the internet TV anyway. Do you know what I mean? So there's so much stuff on it. But after I read that this morning, that gave me more confidence to get rid of it.
Right. No, I hear you.
That's what it's just so weird, that one article.
I love HBO. I love good drama, good shows, and I love good sports. And guess what? You can already get HBO without having cable.
I know.
And soon enough, I bet it's going to be sports.
Unreal.
We'll be coming back, and we know we have Marie on the line from Erie, looking at bios.
That's a beautiful thing. Stay right there, folks. Tommy and I are coming right back. Dow is up 73. Nasdaq's up 13.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's go to Maria in Erie, Pennsylvania. Marie. Hi, Marie. How are you?
Oh, I'm terrific. I enjoyed yours and Tommy's discussion. Was wonderful.
Thanks, Marie.
But and actually, I wanted to ask you about Microsoft. Is this double topping? I mean, I know I asked about BIOS, but gosh, I've been in Microsoft for a while, and it's going up to that high. Actually, went over it.
I would stay right in Microsoft right now. I would.
Okay, because it sure doesn't look like it has the volume.
No, it doesn't. But what you have here is that I like how it had that volume on the 27th, which it just went into January. It just went into it today. But I'd let that play out first to see whether that thing's going to take that out. Because when I look at Microsoft, it almost looks like it's on a daily, it's almost like a small ABC up, but that small one is actually
like
50.
Where are you finding a decline in there?
Yeah, it's like
really searching for a decline.
Yeah.
That I was going to go the other way and say it looks like pretty much a straight channel, 45 degrees to the right.
And you're still going to get paid 2.3% on a dividend too. I'd stay there right now.
Yeah, it's a nice deal. Hey, I've been waiting for you guys to come out with a newsletter that talks to all us old people who need good companies that pay a dividend. Because you got to have some kind of cash flow. I'm just looking at it.
I agree. The cash flow it is a big deal, and keeping the principal is a huge deal. There's no doubt.
Yeah,
there's no doubt.
Hopefully get capital appreciation. I wanted to ask you about BIOS because I've been thinking of getting in, and I missed the entry yesterday. And I'm wondering, do you think this will close that gap before it moves?
No, I'd stay away from it. I looked at this when we were at the break, Marie, okay?
Okay.
And what you have, this is in a vicious downdraft. The stock is, just going from what, is that 2013, Tom? Is that,
yes, yeah. About June, July 2013 at like
1762. Right. Now watch this, though, Marie. This is what I also did, is that the largest owner is selling this. And in fact, Gameco, one of the largest owners, where's Gameco? Here it is, at 10.9% they own. And they just sold 1.2 million shares on March 7th. So they're getting out, and they're getting out at lows. It's like, okay, when I look at that, it's like, okay, what do they know? Right? They're probably taking a vicious loss, but it's like, okay,
They still have so many shares. That was barely like 10% of their position.
No, they do.
They're still like, yeah.
They do.
But.
Yeah.
But if they're getting rid of some at these low
They
prices.
did. They sold off about 10% of their position.
Yeah, it's like, okay, they,
Okay, well,
They wouldn't be
that's
doing
all
it if
right.
they were gangbusters. I hear
I didn't get in. I was just looking at it.
No, listen, I understand. And now the other side, technically what it is, you know how I've always explained that, that had an updraft, okay? Meaning the updraft was there on March 6th. But watch, it did not take out a swing point. What I've found, folks, is that on these vicious downdrafts that, go on for years, which this has been going on for years, okay? This was, and they can't take a swing point out, those are the stocks that can go out of business.
Yeah.
It's a big bounce, there's no doubt. It went from 98 cents, it was trading 98 cents at the December of 2016, and that's a good bounce, but until I could get over $3.43, I've found that if you don't take a swing point out, that's coming into a supply line, coming into another one, and all of us would love to get into a stock at $1.50 and get $10 out of it. So I understand, what you want to do, but I wouldn't do it.
That's okay. I have lots of ideas.
That's a beautiful thing. Totally.
I don't need to use that one. Talking about, do you mind another one?
Go ahead.
Okay, I've been watching the XLU, the utility.
That's the music.
Yeah. So the XLU, this is
Utilities.
the select. The utilities. I would buy the dip on that. Yeah. I mean, I wish you had more time, Marie.
Thank you.
Thank you.
You stay right there, man. Mr. Basil Chapman's coming up next. Of course, then swim lessons. Steve Rhodes, Dave White, myself. It's Thursday. Andy Heck. Thanks, pal.
Thanks, man.
Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.
Thank you.